Good afternoon, everyone. I have muted because of the noise that comes in from some of our computers that are not muted. So if you need to say something or you want to uh, make a comment, kindly monitor the chat frequently. Okay. And I would ask that the Max-Migold team monitor the chat as well so that they can respond to your questions. 1 o'clock again, and our usual Thursday tradition is to have a lunch hour session where we talk about something that is relevant to us in our careers, in our lives, and our businesses. So today, we're talking about finance. Finance is a good business for facility management. In this session, we'll be looking into the whole finance and accounting as it relates to facility management. Talk about certain concepts and principles that can help you become better at the job that you do. These will, of course, apply to you as a facility manager and apply to anyone else who handles, money when it comes to spending and earning money for the organization. All organizations, that we said, one way or the other, earns or spends money, and we play a role in that. So that's why this finance class is very important for you. Today, we made some very fantastic decisions. I will let you in on them. We have made a decision today to move the starting date of the FM Mastercraft 23, which was to start on the 6th of January to the 3rd of February. So that adjustment is to enable everyone to settle into the new year and allow us to do what we normally do every year, giving back series. So we'll be having the giving back series 10 in January, on the 4th of January. So we're going to have a physical session where we invite everyone to come to our training center and experience a whole day of excitement, fun, and learning to start the year. The free training is going to be, shared between facility management and career planning. So as many people as possible should please come. It's going to be more, talking about career planning, making progress in your careers and your life. So it's something that we want to throw out to as many people as possible. Okay. So invite your friends in whatever field they are in to attend the Max-Migold free training holding on the 4th of January. We have certificates for everyone that attends, so it's going to be a big deal. So it's not something you should miss out on. So I'll give you advanced information. That is what I'm very excited. And we're planning to make it a big event. It's going to be purely physical. So plan to be here physically and be here on time, because for such events, it's always, overbooked. So if you don't come in on time, you don't get a seat at the venue. So please come on time on the 4th of January. We normally start at 9 a.m. because it's often a very long day. By the time we stretch from 9 to 12, have lunch, start again from 1 to 4, you see exactly what I'm talking about. It's usually a very long day, so don't miss it. Our bonuses, our discounts are still in place. The whole of the month of November, you still get a 20% discount for those who are paying for the FMMs. In the whole of the December, up to the 21st of December, you will get a 15% discount. So that's something we just also introduced this week. So that this moving from 20 to 10%, we now have another window of 15%. From the 21st of December to the 3rd of February, there will be a 10% discount. We want to make that available. And that 10% discount may also end, sometime before the 3rd of February. And they are the better. That's the whole idea of giving these discounts. Okay. And we have our calendar for 2025. So for those may not be taking the FM diploma, we have a series of training sessions planned for 2025. I would also ask that the Max-Migold team chat. Can we have that 2025 calendar placed on the chat? Maybe an open link. I don't know if the document can be dropped here. I think it can. People can download it, 2025 calendar from the chat. Also put it in our WhatsApp business and Telegram groups so that people can download and keep it and plan for training their teams and train themselves throughout 2025. Don't forget to visit our website. Our training website is filled up with fantastic courses. We are partners of the Global Skills Development Council. We offer all the training of the GSDC in leadership, in operations, in everything, that you can train on. And they're all available on our website. So maxmigold.com/training or facilities management courses.com. That's where everything is. And we have a learning management portal where you can have courses to learn at your leisure. Okay. All right. So let's get into today's topic, finance. We want you to understand the critical role of finance in effective facility management. Talk about budget, cost saving, talk about financial metrics, we talk about financial planning. And we're going to anchor much of this conversation around sustainability of our businesses. Okay. So as the concepts come, we just talk about them briefly. Take notes. If you have questions, please write them down. You can ask the questions in the chat. You can wait to voice your questions when I complete the presentation. I'll give about 10 minutes for us to talk about the questions you might be having. I know that many of us are familiar with the concept of budgeting, with budgets, which is an outline of the plan that you have. But it's not just a list of things you want to spend on. It's actually how you intend to operate, expressed numerically, right? So at what time, or dates during the year you're going to do what is the budget, what's the cost. So the activity itself and the cost come together to make the budget on the period when it's going to happen. Another concept that you probably understand but are not fully applying in the life cycle concept, where you don't think of cost of an asset or cost of anything you do just in terms of the starting cost. You're supposed to look at the life cycle cost, the starting cost, the running cost, the end cost for disposal. I've seen quite a few budgets that have not been the operations items and the capital items have not been clearly separated. Long-term budgets, things for investments and things that will come handy beyond this year, are called CapEx. They are planned for in a separate budget, right? Different OpEx. OpEx is your routine, activities, things you spend on. So always create two separate budgets, the CapEx and the OpEx. The character of both budgets are quite different. The OpEx budgets will not vary, very widely from year to year, because apart from inflation, cost of doing business. It's routine, so it's linear. The things you normally do will just be linear. Whereas corporate budget is drawn out of a strategic planning process where you take all your assets that you have in a site or in a portfolio for a company, and you indicate for each one their useful life. And then you plan at the end of each useful life. So if you have a 30-year capital renewal plan, at the end of it, you have an air conditioning unit, you put 12 years as useful life. This is 2024 that you acquired it. In 2032, that's when year one in that plan is 25, year two is 26. By year 12, which is 2032, that's when you put in a plan, a cost, a budget for it. Now, the ones you know are due for replacement this year, from the planning you have done in the past, they go into your papers. So there are some years you will not even have anything to plan for or execute in the capital budgets. It will just be zero. Some years there will be a whole lot of things to deal with. So separate the two budgets so you can have justification for what you need to do on each one. We're also going to talk about financial risk in operations and maintenance. We have situations where you need to spend money, you don't have the money. Sometimes you have the money and you spend it in the wrong way. And then time now you need to get something done, you don't have money again for it. And then it's also important to think about return on investments. Some expenses may just be obvious. We just sound like this is the obvious thing we need to spend on. I've been using for managers arguing with management about how important it is to, to spend something and do, put out that money. You don't need to have that argument. First, you can't claim to understand, what's more important or how to prioritize spending an organization. You can't claim to know it more than the leadership of the organization. So even if you think having electricity is so important, having water running is so important, they may sound so basic and so germane to you while you are talking about it, but you don't have the big picture. And some of the things that make you not see the big picture is because you don't know how the organization runs. You don't understand that strategic positioning of the organization itself. So we want to teach you that so that you can become more strategic in your thinking. You start thinking in terms of, it's more important, what adds value to the organization at a very high level. Sometimes you're making a point of something that adds value, but at a very low level. Know the difference, okay? So why should you have financial literacy? Decision-making. Many of us make very, very, permit me to say, lousy decisions at that time. A vendor says, I'll do something for 1 million if you pay me now, but if you pay me after I've finished 2 months later, I'll do it for 1.5 million. And the FM jumps up and says, oh no, we are saving 500 if you pay him now. That is a very ignorant decision, right? Very, very ignorant, because what analysis did you base that decision on, that if you pay him 1 million now, you're making a better decision? Because at some points, you even be saying things like, oh, we're wasting 500,000 naira. You have not done any financial analysis to prove whether 1 million now or 1.5 million in 2 months' time, which one is better. And that's something that affects us. So sometimes you just go to management saying, oh, we don't want to spend 1.5 later, let's spend 1 million now. The reason is that 1.5 is higher than 1 million. That's very pedestrian, that's very elementary, right? So what are the tools you need to have in your fingertips to do an analysis and make an informed decision, between paying 1 million now or paying 1.5 million later? Some of the things we discuss in the FM Master Club will give you the tools to analyze this kind of decision, because if you don't understand finance, you can't do those, you can't look into that. And then cost-saving opportunities and optimization opportunities. Sometimes we spend only to realize that we probably didn't need to spend it. Take this simple scenario where an FM, in a bid to prioritize operations, reduce time and the mean time between failures, or the time to repair, mean time to repair, the FM goes to stock materials, right? And then if we do an analysis of that decision to stock those materials, we may end up saying that there's a lot of wasting, holding on to materials that we shouldn't have held on to. There was no clear or proper analysis on what to have done, right? So opportunities to save costs can be balanced against the prioritization of operations and then not critical to the mission of the organization if we know financial consideration. And then, of course, risk management. Again, every situation has to be analyzed using initial metrics and experience. All right, resource allocation. Funds should be allocated to the right activities to maintain operations and improve facilities. And then as an FM, you need to be on top of your finances. Don't spend and look back tomorrow with regrets, right? You need to be on top of your finances, keeping tabs. All right, so let's talk about some of the things you encounter, things that should make you really good at what you do, but sometimes it makes it look as if you don't know what you're doing in the organization. First, understand the organization's mission and how your budget as an FM and the financial decisions you take will move the organization towards the mission. What you spend on should not be disconnected from why the organization exists. So you elevate your thinking all the way up and find a link between the things you spend on and the things the organization values at that level. You must have that connection. So it's actually just filter off things that are not relevant. Sometimes relevant to you, the way you see things, right? But not really key to the organization if you have to prioritize. The other thing is, if you get this right, you will have perfect alignment. You will never get a proposal up that is not approved, because that's something that many people fear and many people suffer from. Proposals are not approved. And why are they not approved? Because there is misalignment. You're moving in this direction, your organization is moving in that direction. Okay. And sometimes just because you have something you need to deal with, and you have only one way to deal with it, that can be your undoing, right? You just know one way. You don't know, and that way might be a high cost, a medium cost, low cost, or even no cost option. But that's the only way you know. You didn't do an analysis of options, do pros and cons, do cost benefit analysis to see the ones that are more in line with the organization's position at that point. You would have lost out in that decision making. Establish rapport with your organizational finance personnel and external customers. And FM should not be a hidden figure, lost in the shadows. No. Establish rapport. Let your personnel show that you are really a support structure for the organization. They will begin to prioritize the things that affect FM, because they see that if we prioritize the things the FM needs, we are prioritizing what the organization needs, because we have proven from these antecedents and the precedents of past expenses that every time we hear what he needs to do, they are always aligned to what the organization wants. Now, that is alignment, but then your personality now needs to add to that. If people suspect that you are a thief, or that you are unscrupulous, or that you are mischievous, just trying to line your pockets with opportunities, there is all kinds of reasons for not approving what you are trying to get approved. Understand your budgeting roles. If it's top-down, management sets it, own it, and deal with it. If it's bottom-up, put your proposals forward. Understand fundamental accounting practices and organization-specific practices. This is very important. FMs should follow the books. We should not be seeking exception to do things differently, because what we do is so important. Therefore, all these bureaucracies should be set aside. By the time you start pushing for such position, and you don't want to learn the accounting codes for charging the diesel that was used in the lawnmower, it's a different code from the diesel that you put in the vehicle, it's a different code from the diesel you put in the generator. You have to understand everything. You have to understand the timing of all the entries. If you have to make accruals, for example, that's another topic in finance as well, where you account for the value you have gotten, even though you have not paid for them yet. It goes into the accounting system. You have to understand them. It can be the make or break of how you are perceived in your organization. So many people just think some people are promoted or some people are employed to come and fill a position that they should have taken when they are there, when they are there and nobody took them in. No, these are the things management look at. If you can't get your head around a simple ERP tool for, entering data correctly, nobody's going to promote you. You're going to be handling the stock people for a long time. Maintain financial handling processes. If retirement for your expenses has to be in by certain dates, don't have any excuse, just deliver it in. If you have to make order for diesel supply and it's going to take 6 weeks for approval, order to make sure you have 6 weeks for approval, and order to ensure that you have enough time for the lead time to deliver. So you don't run out of diesel and say because of the system, it's your fault. Keep accurate financial records. It's not just enough to know how much you are spending. You must also know exactly where you are spending it on. If I have 200 air conditioners in my complex, I should know exactly how much I'm spending on each one, identified individually. Each item on my asset register has its own identity. I must know what I'm spending on each one. So that if it's time to replace it and I'm trying to do a facility condition index or an analysis that compares whether to repair or to replace, I need to have accurate numbers. So don't just keep spending things in lump sum and then assuming that you won't need the data for analysis. Okay. Prepare accurate and timely operation and capital budgets. 2 budgets very compulsory. Monitor your budgets. Don't wait and be surprised by a budget that just ran. And then know how to discern the major implication of external and internal financial statement. Your organization's health is laced inside the annual report it issues out every year. Use to deepen your understanding of the organization's strategy, direction, and the success factors of the organization. This is one concept that FM should understand: direct and indirect costs. The whole concept of cost sharing, chargebacks is all tied to your understanding of direct and indirect costs. Why direct costs are the ones that are specifically traced to an activity. Indirect ones, overheads, the things that happen around that activity, but not entirely to it. So if I have a cleaning contract and I know the labor costs, the material costs, the supervisor of the cleaners, all their costs are there. But if I have a HSC person who comes in to check on the work of that cleaning crew, that HSC person is not 100% a cleaning team member. So how do I determine how much of his costs goes into the cleaning? So we're now talking about the traditional cost measuring systems and the activity-based cost measuring systems. These are some of the things you will learn. So you can actually apportion costs, allocate costs with wisdom whenever you're managing your operation. The concept of best value is simply you must pair value and money, right? And to pair value and money, you must be able to define value. And for me, that means you must be able to specify in clear details what is necessary, the features, the utility from any service or product, right? So if you need to get cooling, you need to be able to specify the period of cooling, temperature, expected ambient, noise level. Cooling system can be noisy sometimes, and all that. Being able to specify correctly is the value. This is what I want, right? Then for that specification, I need to get the cheapest of it. So if I can specify correctly, go for the cheapest. That's best value. If you for any reason now encounter another item, utility, feature that you desire that comes at an extra cost, you have to modify, like restart the whole procurement process so that it must be added, so that you have a full picture of the specifications of what you want before you go looking for the cheapest price. Always consider that. Clearly specified, cheapest price of it is what best value is. If somebody gives you something just slightly higher, and then tells you that it is because of a certain other specification that you did not go out looking for before, don't do it, because that's not best value. Wasted that money if you do. If you really, really must go for it, then come back and restart the process so that you are always defining what you want and going for best value. Don't be an impulse buyer when it comes to facility management. And then there's a concept of deferred maintenance. Deferred maintenance is talking to situations where facilities have certain defects that you could not carry out, you cannot fix for different reasons: shortage of funds, shortage of personnel, budget not approved, work being too small to package, different things. You as an FM must have a log where you catalog each of those items. So if you now need to do that maintenance tomorrow, you are not going to start scoping them because you've already scoped them immediately they happen. So if your building is looking, gradually run down over time, you are keeping a log of every defect. You are doing your inspection thoroughly and you're keeping a log of every defect. You have a full accounting of what's going wrong, every inch of it. And what do you capture there? You capture the location, the defect's name, scope the problem, describing what the issue is, propose a solution, scope that solution, have a cost, have a duration, how long it will take, resources, who will be able to fix it, and then have a prioritization for every defect you have. Prioritize it, give it a rating or ranking. HSC, certain risk items, then down to the routine defects. That priority you have done for each line item is going to be used to arrange them, sort them in such a way that if somebody asks you what are the most important things that we can put a certain 20 million that's just come up now to fix in this building, you're not going to think twice. You're just going to sort using priority one items out and say, we can deal with these ones right away and we'll get our buildings back to compliance, right? And then we can now have the next level of priority, deals with maybe comfort and deals with aesthetics and so on. That's exactly how priorities work in the different maintenance program. So for a facility manager to say, I know what I'm doing, I'm on top of my job, you must have a deferred maintenance log that gets longer as your building gets worse, gets shorter as your building gets better. And we use it for, we use that information in calculating the facility condition index, which is an indices for comparing buildings. It indicates the condition of your building. And the formula is the deferred maintenance plus capital renewal divided by current replacement value. If your FCI is within these ranges, it tells where your building is as the condition of your buildings. Okay. If when we discuss this in the facility management diploma, we go into the deeper. You do, like you have an example here. If you have a facility, you picked out all the defects and you add it up, you're basically trying to compare it to what it will cost to replace it. So if I now have to make a choice between repair and replace, this is the kind of analysis the CFOs understand that you can present. All right. And also, if you spend money on your operations routinely and you are tracking your FCI, you can use that to justify why you need to do your routine maintenance as an ongoing activity in your organization. And then, of course, think about your proactivity principle, the 70-30 principle. If you allow things to break often and then try to fix them, you tend to spend more, right? So we advocate that when it comes to managing finances, proactively inspecting, checking, and fixing defects before they become rampant or blown up will save you money. All right, we talked about budgets. One thing that budget does for us, it forces us to plan. It helps you to schedule what you do in January, February, March, April, May, June, like that in December. It's almost, without actually planning, you can't have a budget, right? And then one thing that you also do during budgeting is, we call this budget defense, but really their assumptions? What are the bases for pushing certain numbers into our budgets? Inflation, minimum wage, different types of things, compliance that we need to fulfill, all of them come in there. What do you do with your budget? How does your budget help you? It helps you control costs. I always say you can't be saving money after you've budgeted, because a budget is an amount that is being set aside, right? So if you go and save that money later, you have made a decision to lose the opportunity of using it because you budgeted it for you as your need, right? So you cannot be budgeting and padding it and hoping that you save it and then receive some accolades. No. You budget to look for smart ways of delivering on what you need to deliver. And in that process, you are helping the organization to control its costs. You are also using that budgeting system to think about the organization's mission and asking what is relevant to accomplishing that mission, and keeping your budget focused on activities that can bring the highest level of impact. Every time there is an to make a capital improvement or replacement, what happens to your operational budget? There should be an impact. If I change all my windows and doors to energy efficient ones, to properly thermal insulated ones, I should be able to show that I save energy because my air conditioning now are performing better and using less energy to cool the building. There has to be that relationship. If you did not budget or you don't have those kind of correlation, you have issues. Some FMs had problems with management during COVID. Everybody went home and nobody in the office, or very few people in the office. But the FM could not still bring himself to even cut down costs by 10%. Almost everything was the same. How do you expect management to take that, right? So you need financial knowledge to be able to create the kind of analysis that shows where the funds are actually going into. So that once there's a change in this area, you might be able to show the concurrent impact on another area in your operations. As for how budgets are done, budget approaches, the authoritative ones are, budget that management brings. In hard times, most management will go authoritative. We look at the business. We want to achieve ABC, but we can't spend more than that, right? So these are our objectives. You go deal with it. You have to sit down with your team and come up with ways to satisfy that need, because it comes top down. In some cases, everything will be laid out and say you must spend not more than this is broken down. In perspective one, you are allowed to bring up your budgets, your whole plans, but you want to focus on what the organization's mission is and strategic objective. So your activities must tend towards fulfilling those. Management will still approve, but they allow you free hand, you and your team, to build up from first principles. And then you have the combined budget where management from the top comes, this is how much you can spend, these are what you want to achieve. You build up how you're going to arrive at a solution, and then there's back and forth reviews of the process. In terms of the method of creating budget, at a basic level where there's nothing on ground, you're starting a new operation, you're starting a new contract, you start with activity-based budget. You look at what should we do inside the activities, and then you remove anything that is irrelevant, that does not add value, and then you plan the schedule, and then you put a cost to it. That's activity-based. It starts with a plain sheet, nothing before. Now, when it comes to incremental or historical, or we also call historical budget, there is already budgets from previous years. You put it down, and you don't have any need to review the line items. You just look at the amount. This amount we had last year, is this still relevant? Should we use it? Should we increase? Should we reduce? That's what you are doing in the incremental budget. But the zero-based budget ignores completely all this amount. That's why it's not historical. And then tackles line items one by one and decides whether the line item should be in the budget, right? So it's as close to activity-based as possible, even though it's still based on the template of it doesn't have any reference to the amount in previous budgets. That's why it's called zero-based, like zeroing out the previous budgets. I've talked about OPEX and CAPEX budgeting. It's important that we separate the two and understand, how the various cost variables, add up into our budgets. Okay, so there are certain costs that will be fixed. There are certain costs that will be variable costs when doing our operations budgets, purely for OPEX now. Separate them. And for the fixed and the variable ones, let the customer know what is driving the variability in the variable ones, because sometimes your total budget is big. And everybody are shouting, how can you expect to double your budget? Blah, blah, blah. And all you are saying is things are not expensive. No, don't go there. Don't go there. Don't use all those lame ways to justify your budget. Provide a proper breakdown. The fixed ones, if they went up, there must be inflation related, there must be currency related issues, there must be price index related issues. Use statistics, use numbers in the public domain to support fixed costs going up. I had to defend a proposal just yesterday by telling somebody, look, minimum wage has gone up. I can't be giving you a proposal now and be using cleaner salary of 50 or 40,000. It's not going to work anymore because minimum wage has gone beyond that amount. And the client understands. So you must be able to use that. So those are fixed costs. But for the variable costs, they are often driven by the activities of the user. They're often driven by the things. Take, for example, amount of water you use. Energy, these are utility things that are driven by activities. So these are the ones that you need to now use proper data, measurements to justify. Your budget should also be tied to objectives. I keep saying that. Do not have budget that because this is what everybody else does, or because this is what we must do. There's nothing you must do. Nothing you must do. Everything you must do must be tied to an objective that must be achieved. End of story. So that's how you focus. That's how you create budget that makes sense. You link them, you tie them, and then the client understands what you're basically working on. And I've seen some estates where almost every year there's a fight with the FM team. There's war because the FMs just allow the cost to go haywire, and then they come to the users and say, oh, this is the reality on ground. Sometimes I don't even blame them because the client also insists on paying you, the FM, a percentage of what you spend. How dumb is that? Why would I want to pay you a percentage of what you spend? So if you waste my money very well, I will pay you a percentage of that wastage. Doesn't make sense. I'll rather pay you a sizable chunk of money as your fixed management fee. Why putting you on a tight KPI to kill down my costs so that I can have a substantial savings? If you have that free hand to spend and then bring a report and say this is how it is, then be ready for the ongoing battle that takes place between the FM and the estates committee on a year-to-year basis. Something that you must be a champion of in your facilities, in your operations, is cost saving. You're already the one that people see as spending the organization's money. You're already the assumed or perceived as the prodigal son in all organizations. That's FM for you. But if you are smart about spending, if you are effective or efficient in cost saving and cost reduction, you'll be seen as a champion. You'll be able to trace those savings directly to profits of the organization, to the bottom line. Energy efficiency, preventive maintenance, outsourcing certain non-cost services to people who can provide it cheaply, negotiating contracts, especially the service levels in contract. We make a lot of assuming that the guys who are coming to do the jobs, they know better than us. If you don't understand the service level in your contract, they will just take your money and do as little as possible. To be honest, every contractor wants to, they always test that, ask them that, You can't know what you can get away with until you try it. So they always like to do something less and less, and they keep getting the same amount on an ongoing basis. And then space. Space is money. Space is a big deal. Optimizing space. If your space is too much, outsource some space as a service provision, open office or some kind of shared thing that can bring revenue. Think about what can bring revenue. Too many facilities right now and revenue generation opportunities. So it's not just enough to save, cut what you are spending, but you must also think of what opportunities there can be for raising money. There are some of your facilities are in environments where traffic is very high, right? Even advert opportunities where advertising agencies can come up, put some things on your fence or some places where eyeballs can hit it and you get paid rental for such spaces. You probably haven't thought about that. And then there are many things like shopping, like provision of certain services. They both provide utility, but they also generate revenue for the estates. Now, think about sustainability when you're dealing with financial planning as well, especially with the CapEx side. Prioritize green investments, things like that are eco-friendly. And then when upgrading, don't always try to use the same time the things that were there to replace what was there. No, it doesn't make sense. Look for more improved solutions that replace it. If you don't look out, you just take specification of what is there and go and do what is there. You'll be living in the past. And then think about long-term maintenance costs when making decisions. Some things are cheap at the beginning, but then they'll choke you when it comes to maintenance. And then, of course, if there are financial incentives you can tap into from the government, why not? Please take advantage of them, especially when it comes to, solar investments, renewable sources. There are good opportunities from companies and from the government out there that you can use to make such investments. Stakeholders are very important. The owners, the occupants, they are very important when discussing financial expenses. I'm one for 100% transparency. I'll tell you how much I want to earn, and I'll tell you I want to use all my best faculty to work for you, and these are the solutions I'm providing for you. It's when you start getting cheap and petty that you want me to stay awake night and day and earn nothing, and yet you want to save all the money and still get all the best value. Then I'll prioritize another customer over you. That's economics, basically, right? So return on investment, yes, I want to make sure you get the best as my client, but you must have that balance. Allow me to do that job. While I must show that I understand exactly what you want to achieve and I get your buy-in for every decision that I recommend. Now, for facility managers, you recommended something, you push for it, you started getting savings. And many of us just say, can't you see we are making savings? Where are your numbers? What were the numbers before? How many liters were you using before? How many liters are you using now? How much is the difference between what's that gap that you have saved? And how long can you sustain that for so you can claim that benefit of that savings now? What about cost? You've brought in something that helps you save so and so amount per day. Is that system going to be sustainable for 5-10 years? Multiply all the savings for that 5-10 years and say, I have just saved 500 million naira by doing this. And somebody will ask you, how do you mean you save 500 million naira? What I've just done is going to save 1 million naira a month. And I've used 500 months, which is how many years? 20 years. To say, we're not going back to the former old practice. This is going to keep giving us that savings. And that's why I told you I have to save 500 million. So that's the idea. You must talk the financial metrics that shows that you have done something reliable for the organization. You must have a baseline for every of your costs. So if I'm going to make an improvement, I must say this is where I was before. This is the actions I took and the cost I spent, and this is where I am now. And this is how much we've been saving. That's basically how you do it. If you don't have those numbers, you cannot make the claim of that success. So let's talk about this risk management aspect. There are some things that will just break with all the best intentions. It just breaks, and you have to fix them. If you don't have a risk management plan where you itemize the likely failures you may experience so that you can put, a contingency. Every time I hear about contingency, people think it's miscellaneous, where you just put an amount randomly somewhere and say, oh, that amount is there for any unforeseen. No, you need to carefully plan your risk management plan first, and then look at the risk management line items to come up with what your contingency or risk budget should be. Okay. There are variability that you may not be able to predict. Sometimes, take for example, a utility cost. The price of petrol can just go boom, 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 boom over time, right? So when you are in such volatile situation, at least identify that line item in your risk management plan and create a budget that allows you to adjust, a little by little over time. Take, for example, how much you set as your tariff. There's a spreadsheet you can create that you can plug in all the inputs that makes up that tariff, such that if there's a change in anyone that is highly variable, how should the tariff move? Discussing that with the clients will create some kind of transparency. And then you have compliance penalties, fines from not meeting safety environmental regulations. Sewage plant broke down, they're wasting time on it, nobody's taking it seriously. Fire systems not working, elevator not being checked and not being certified, and so on and so forth. These are compliance issues that may seem like not choking the facility, they're still running. But when they are discovered by the authorities, what happens? Big risk. You get letters and letters and shutdown and things like that come to you. So plan them very carefully. And of course, budget overruns, if you exceed your allocated funds, it happens. So if you're going to exceed your allocated funds, let it be something you do consciously plan for. If there's going to be change to your next month, you should know now, start engaging now. It's not, in the thick of the moment, you now start struggling to find the funds to do the, do the magic. Asset depreciation, loss in value of equipment and infrastructure over time. Virtually, apart from the land, every other asset will degrade over time, and you have to deal with it. So if you use deferred maintenance to tackle all of those degradation, you can plot how it's going down and have a long chart of things that can be fixed to bring it back up. Talk about preventive maintenance. Sometimes our procurement is very not effective. We have few vendors who tell us, whatever they tell us is what we have to deal with. If you diversify your supply base and you allow an open market approach, you will see a lot of cost reduction. And that's one of the things that you enjoy from being an alumni of the FM Mastercraft Diploma. You are now in a vibrant FM community, the biggest in Africa, with over 800 members, going 900. And when the next class the graduating joins, we'll probably be talking about 1,000 members. That is the kind of body you want to belong to, because every time you put out a question, you need vendors for this or that. There are people in this community managing, substantial properties across the country who have encountered such issues before, and you get solutions. You can broaden your supplier base just by being in this community. So if you've not taken the FM diploma, I don't think you should still be wasting your time. It doesn't matter what level you are in your FM career, you can still take it. I've seen heads and directors of FM department come to take it, and then afterwards pulling their whole team because of the kind of vibrant community that this brings at the end of the program. And then, of course, audits, compliance audits will help you, keep looking at your operations to decide whether the things you are doing are in line with your goals. Of course, we talked about contingency funds, then what comes out of the risk planning. What are some financial metrics that you should have? Most people are just all about, this is total money for this is total money for that. Those things are not relevant because you're not tying them to the cost drivers. You're not tying them to the productive values of the organization. What if you produce a million liters of water a year and it was used up? By who? Right? That's what I need to know in the metric. There have to be a way of connecting, what you are doing with what the organization is supposed to be spending on. Cost per square foot, for example, cost per unit of electricity, maintenance cost per asset, maintenance cost per square feet, occupancy cost per employee, return on investment, all kinds of metrics. There are hundreds and hundreds of metrics. This is the language you should be speaking. How to develop metrics? Yes, you will learn all of that in the mastercraft as well. And for those who have, taken this program, I believe by now they are also able to, use intelligent approaches to create spreadsheets that they use to put in the right numbers and the right formulas to get the kind of metrics they want. If I want to have my budget move from 10 million to 50 million, I don't necessarily need to come and say 10 million to 50 million. Oh, please give me 50 million. No. I probably I can be able to do my analysis to show that my cost is going down. Cost per person. People might have come in, my area, my space could have increased, and so on and so forth. If I'm doing that, I'm getting more money to spend because I'm able to use metrics to speak. And then, of course, I must monitor trends. So if I start with a baseline and I start managing the facility, I must track how things are moving on. We must also leverage technology. There are all of the tools we use in FM, whether it's a computerized maintenance management system, a CAFM system, or whether we're even tapped into the organization's enterprise resource planning tool. We cannot overlook how these tools can help us. For example, if I service a generator and I enter, create a work order that ties to a PO for the maintenance, when it is paid, that amount is recorded against that generator. So those kind of information, I can tap into them later to take decisions, to predict, to analyze, to support certain positions I want to push to management. Finally, I just want to talk about, how the facility management operations and maintenance are strategic. It's not something that we should think of as a backroom activity. If we're able to think about facility management investments, our operations expenses in terms of how they add value to the business organization. So you can't talk about this if you do not understand the business organization. Things like worker productivity, sustainability, cost efficiency and profitability. Okay. And then having ability to measure financial metrics, return on investment, cost benefit analysis, and some of those financial ratios that helps us to communicate to the organization that we are the best, we are using the money the best way it needs to be used. Okay. And of course, when you have risk scenarios proving that your investments are reducing risk, such as energy inefficiencies or equipment failures that can be, can lead to more terrible disasters later. Show future benefits, demonstrate how investments align with future growth, regulatory compliance, and market competitiveness. Facility management is a data-driven profession, right? So as facility managers, people working in the business environment, whatever data you think will help make sense, show your contribution to the organization's top level and bottom level, you need to gather that data, because that language will need to be spoken at some point in your reporting or your decision making. All right, so that is our lesson for today. Let me see what questions you have. Charts. If you do have a question to speak out, you can unmute now. I've allowed you to unmute to speak, so your mute is. I see a question about the slide. So in the recent conversations, we previously didn't share the slides of the lunch hour, but we're going to have a way to give out the slides now. We're going to send out emails with links for you to be able to download the slides. We're going to make that available. If you visit our YouTube channel, we're going to set that up. We'll set them up in links on the YouTube channel, right? So if you watch the video on YouTube, again, we'll embed a link in those videos for you to download the slides and of course, have them for future reference, okay? I'll talk with the team and we'll get this set up as quickly as possible. Okay. Well, I think that's the only point I see on the chat. If you're on the FM, Max-Migold training platform, please drop all the questions you have, in that WhatsApp platform. I'm always there. I'm always watching. I'm always responding. If you want to reach out to me personally, you can reach me by WhatsApp text, not calls, because sometimes I get swamped on 080-220-20122. Let me see if I can put that on the chats. WhatsApp chat 080-220-20122. Please, if you do chat me, kindly introduce yourself with your full name and then, a proper expression of what you need so that I can respond to you and prioritize that. Okay. You must have all seen the YouTube link. Kindly use that YouTube link to rewatch this episode of the Lunch Hour as well as all the other previous episodes of the Lunch Hour. As much as possible, we'll keep it sustained Thursday to Thursday and see you here another time. Have a good rest of the week ahead. Bye, everyone.
Wow, cool, man, cool.